Good afternoon, everyone, and welcome to today's webinar, Selling into Australia, Mastering Australian Taxation for New Zealand Businesses. Brisca New Zealand proudly sponsors this webinar, and my name is Sumith. I'm the CEO at Brisca Global, and I'm glad to be your host for this session. It's great that you could join us today, and we have an exciting and insightful conversation about the Australian taxation and how New Zealand businesses can navigate through the challenges. So we are joined by an expert in international taxation who will help you expand your knowledge in selling into Australia. Before we begin, I would like to go over a few housekeeping points. This webinar will run for approximately 1 hour, including 15 minutes of Q&A time. If you have any question during the session, please type them into Q&A box and we will do our best to address them either during the session or at the Q&A segment at the end. A recording of this session will be available afterwards and we will share the link with all registrants. So without further ado, I would like to introduce our expert for today, Michael Messner. Michael is a member of a few reputed accounting bodies worldwide, including CP Australia. So currently, Michael is the Director of Taxation and Business Services at Vantage Accounting in Brisbane, Australia. Michael has specialized knowledge and experience in international taxation, and Michael's firm, Vantage Accounting, helps many Australian and New Zealand businesses navigate the challenges in complying with the highly regulated Australian market. Michael, welcome to the webinar.
Thank you very much, Sumith, for having me on today. I'm really excited about it. We'll have a bit of fun today. And I think the most important thing for all our attendees is please ask questions. It's not supposed to be a lecture. It's supposed to be a bit of fun. And obviously, I'm happy to give you the answers that you're looking for.
Perfect. I will get your presentation up, Michael, first. That it will be easier for the participants to sort of follow what you're talking about. So let me get that up. And
thank you very much. Just on a high level as well, or as an opening note, it's very, very interesting. Before COVID, obviously Australia and New Zealand always shared a bit of a special bond, and there was a lot of transacting across the border. During COVID, obviously things slowed down, but since COVID, things have just exploded, and especially the last 1.5 years. It's been amazing how many Kiwis are moving to Australia, how many Kiwis, as a result of peers having moved over, are now doing business cross-border. I think one problem that we frequently see is that we get involved when it's too late. People have already done something and we can't rewrite history. So it's all about making an informed decision before you actually do what you're about to do. It's actually not that difficult or complex as people think. We just need to point them in the right direction. And once we've done that, things are quite straightforward. The most important thing for most business owners is just that they can sleep at night. So ask your questions today, reach out in the future. We're always happy to help. And don't worry, there's a lot of opportunities to be had. You just need to know a couple of things that you need to address proactively, and everything will be fine.
perfect. So we got your first slides here, Michael. Let me know when you want me to move the sizes.
Yeah, look, that first slide, it's just a glamour shot, obviously. I'm not one for post nominals. Probably a bit about myself. I'm a weird creature. I actually grew up in Singapore. I'm Swiss originally. I was born in Switzerland, but then pretty quickly at half a year of age, moved to Singapore. Grew up there. That was home until my late teens. Then I went to the UK to do my degree in banking and finance at the London School of Economics. Worked then in investment banking, structuring derivatives for several years until the GFC. Did a master's in economics over there at the time. Continued working in investment banking. Work brought me back to Singapore at the time, and then finally to Australia. And one morning I woke up and said, "Hey, I actually don't want to do this anymore. I don't enjoy it. I want to work with people and do something that's real economy, not just numbers on a screen." So it's funny that I've become an accountant, but trust me, I'm not good with numbers anymore. So it's more other things I do, advisory and the likes. And we were in Australia. I became an accountant and haven't looked back since. And because of my international upbringing and moving around and having to look after my own tax affairs, and my dad had his own business as well, I was always interested in the international tax side. And the sad thing is that many accountants in New Zealand and Australia as well just don't have an interest in the international side because it's not straightforward. You just need to do it on an ongoing basis to be good at it. Frequently, people are pushed then to big four accounting firms where partner charges $1,000 an hour for basic advice. We don't operate that way. So I'm really passionate about this field, and that's why, again, I highlight, please ask questions if you have them. There's no silly questions. It's only silly if you don't ask, if you actually have a question. So yeah, let's move on to the next slide. I think people see my face enough today. And yeah, this is a bit of an overview. Today, we're only going to talk about what we actually need to look out for when we sell into Australia. We have obviously 2 more webinars coming up. Those 2 webinars will then talk about subsequent issues. Okay, what's actually happening if we're setting up a branch in Australia? What if we have people in Australia? And also more about taxation in general. But this is really an overview, a crash course. You're now in New Zealand or wherever you might be, doesn't have to be New Zealand, and you want to sell into Australia, what do you need to look out for? And the most important things, in my opinion, that you need to consider when you actually want to sell into Australia is, am I allowed to sell that thing into Australia? So we'll talk a bit about what we can do, what we can't do, what we can only do subject to certain conditions. Most of our listeners or attendees today would probably fall into the category, I can do that, it's unregulated. Australia is still a very free country in terms of trade, so that's good. And then we need to get a bit of clarity around, okay, not just am I allowed to sell into Australia, but what is actually the thing I'm selling into Australia? And I use the words the thing on purpose because I borrowed that from our GST legislation in Australia. When we think about international trade and selling to someone, we always think about goods. It's not how it works anymore. Actually, a vast majority, more and more, of our trade is actually, especially between New Zealand and Australia, is actually now services as well. And that's just reflected in this day and age by people being digital nomads. You could be working from anywhere. I've had that recently where 2 road engineers moved over from New Zealand to Australia, and they're doing the work here and they're flying back every couple of weeks. So what is the thing that I'm actually selling into Australia? Because that changes everything else again. We need to obviously look at the laws that apply when we sell to someone in Australia. Hang on, what law governs our contract? And this is important, obviously, if you have a B2B contract, a proper contract. But it's actually even more important if you just sell a widget. If you sell a pen into Australia, you'd be surprised what the legal implications are. Need to be a bit prepared what the law is. Don't worry, that doesn't mean it's not lucrative for you to sell into Australia. But what it really means is that we just need to be aware of a couple of things and be proactive about it. The other bullet point I'm going to talk about is what taxes and tariffs apply if I sell into Australia. Obviously, you want to know what your margin is. So you really only also need to know what your taxes are, where you have to pay them, etc. I'm going to limit that today only on GST when I talk about taxes. Tariffs, unlike Donald Trump, and I'm going controversial here, I don't like the term. The person buying the good is paying them, not the country that is actually exporting the good, but Donald Trump would disagree. But anyway, it is what it is. So we'll talk about that briefly. And then the last point I'm going to talk about before we do some applied examples is how do I actually get that thing into Australia? What are the practical implications? If you provide a service, well, that's not that tricky. If you provide a good, well, that can be a bit more tricky. That's what we're going to cover today. If there's thoughts, questions, or someone shouting, Michael, you should talk about this, just put it in the chat channel anytime. Happy to also take a segue. Thank you. So the first thing we're going to talk about is, am I actually allowed to sell this thing? And the good news up front is we usually have 2 types of scenarios. Number one, you only can sell approved items or can do something that's approved. Or the other option, you can do everything unless it's not specifically disallowed. And this is the great news when you want to sell services or goods into Australia. I'm saying here that you're allowed to import. There's no list of items that you're allowed to do. You instead have to be aware of the restrictions. And look, I'm oversimplifying it if I only give you 7 bullet points here. There is more to it, but this is it on a high level. Right. The first and most important item probably is, believe it or not, I checked the statistics, is motor vehicles. You cannot just simply put a car in a container and ship it over to Australia. You're not allowed to do that. If you want to do that, any type of motor vehicle, that also includes a motorbike, even a motorboat, careful, we have yachts right below, you need to first reach out to the Department of Infrastructure, Transport, Regional Development, Communications, and the Arts. Personal comment, political comment, I hate it when different governments constantly reshuffle the departments, the different ministries. I don't see how the arts really relate to transport and regional development, but whatever. It's just one ministry at the moment. Could obviously change in the future. The interesting thing is also for our Kiwis, I know that you have your main roads department or whatever it's called in New Zealand that is in charge of motor vehicles. Here in Australia, because we have federation of 6 different states, every state actually has their own transportation body. So here in Queensland, where I'm located, we have Transport and Main Roads Queensland. In New South Wales, we have the Roads and Maritime Authority, and so on and so forth. But this is a federal body here because you bring it into Australia and you need to speak to the Federal Department of Infrastructure, Transport, Regional Development, Communication, and the Arts. If you want to import a motor vehicle, frequently that is just filling out a bit of paperwork and getting it signed off first. However, if you wanted to import something that is not a car, that is road legal, maybe a race car or something, then there's forms as well. But then it gets a bit complex. The second item we've got on the list are actually yachts. It doesn't matter whether it's a private yacht or a super yacht. Believe it or not, sorry, I'm not into boats. I'm an accountant, and so by definition, every boat is named money pit, in my opinion. But it turns out that a super yacht is actually defined as one that is available for hire and designated for trans-ocean journeys. Whatever it is, if you want to bring in a boat that's not just a tiny little tinny, and sorry, that's maybe an Australian term. Tinny is just a little tiny, like rowboat, for example. You need to speak to Border Force, okay? You can't just, and if you actually have a yacht, you can't just sail it directly into Australia without first having permission from Border Force. So be it. Again, there's standardized paperwork there. Fascinating to me is the next bullet point as well, animals. You can't bring an animal, any type of animal, whether it's a domestic animal or not. You just need to get permission from the Department of Agriculture and Water Resources first. Again, that's a federal department. And this is an interesting one. There are actually restricted animals you can't bring in. Exotic animals, you can still permit all of them, but there's 5 animals that you can't bring in. And that's all dogs, interestingly enough. So you can't bring in a Dogo Argentino, a Fila Brasileiro, a Japanese Tosa, an American Pit Bull Terrier, or a Perro de Perosa Canario. Why? Because they're all big, bulky, muscular dogs, and they have been bred for hunting and tracking, specifically large game. And that obviously because we are a very agriculture heavy industry still over here and have a lot of livestock, they're just considered a risk. So you can't bring them in at all. That's probably the first item I found on the list that you can't bring at all. The next item we have on the list is antiques. If you want to bring in any antique, like a mummy's mask or anything such, you just need to speak to Border Force first. Obviously, if it's a replica of an antique, you're fine, but otherwise you need to get permission from Border Force. And then we have, careful, we might have family members overseas that we might want to bring into Australia, or maybe you are in the funeral business. Someone's last wishes is to be buried in Australia. You can't bring in human remains or ashes. You first need permission from the Department of Agriculture, Fisheries and Forestry, which I found quite interesting that ashes falls into agriculture, fishery and forestry, but so be it. Precious metals, coins, jewellery and currency, you need to speak to Border Force, and that's why on importation of these you have to fill out a customs declaration specifically regarding these items because they're obviously very, very high value. Careful, that doesn't actually mean that you can't really bring them in as such. Once you've got permission of that, you need to pay high amounts of withholding taxes. It's frequently just for statistical declarations that we know what is where. So yeah, just reach out to Border Force. And last but not least, we've got intellectual property here. And for intellectual property, again, speak to Border Force. Intellectual property, you'd say, hang on, that's an intangible. How can I bring this in? No. This specifically talks about bringing in branded knockoff articles. And it's self-explanatory. You can't just bring a fake Louis Vuitton handbag in. Border Force is in charge for it. You might get a permit if it's an art display play or whatever else, but otherwise you just can't bring in counterfeits. There's actually one more item that I didn't put a bullet point on, I realise, and that is weapons. They are restricted as well, and with that defence article. So if you want to bring a tank into Australia, you probably need a permit for it, but who's got a tank lying around? I don't think many people. So that's broadly it. These are the important items. If you're thinking of bringing any of those items into Australia, just be very careful about these. Okay.
So, Michael, instead of the business owners goes into different places to get the approvals, is there one particular place or an accountant could then help them sort of navigate through these challenges in getting the permissions?
Yeah, absolutely. Really good question. It's not necessarily the accountant who would help here, but that's where customs agent comes in. And customs agent, there is private companies, but interesting enough, most freight companies, because we're usually talking about most freight companies, whether it's DHL, UPS, FedEx, or even Australia, New Zealand Post, they actually have their own internal customs agents that can give you a lot more assistance. But also in general, there's standalone freight brokers who would be able to help you with this, because without the right paperwork, whoever handles the freight will not even load the item, right? So you obviously need to always attach your customs declaration. And if you have a custom declaration, I'm bringing in a Japanese Tozo dog. Well, hang on, where's your permit for that? If you don't have it, well, then they won't accept it. So first port of call, really good question, is always speak to your customs agent or your freight handler or freight broker. They will then help you out. All right, we'll move on to the next slide. The first slide was importations, which refers to physical goods. We also have intangible goods that we might be bringing into Australia. And this is, I think, very important these days as well, because we're doing things obviously cross-border. Knowledge can be applied from pretty much everywhere if we're having an intangible, and that's why we need to be quite careful here. Financial services is the first item. And financial services in Australia, careful, this is actually very, very broad. This could be you being an asset manager, and even though you're only offering your services in New Zealand and only to New Zealand residents, you might still need a permission from ASIC. So I've had it before where a mortgage broker from New Zealand moved over to Australia and still did his mortgage broker in New Zealand because it is a bit different and that was his business. He could do the work from anywhere. But I said, hang on, careful, have you actually checked with ASIC? And he needed to get a permit from ASIC here in Australia actually first to do his work. Even though it was a light permit, it was issued very, very quickly. He still had to register and meet some requirements to do the work from here, even though it was his own business. So yeah, just be careful there. This also goes further. If you are assisting a business fundraising and presenting financial products over here to local clients, careful, you probably need a financial services license with ASIC as well. So speak to ASIC. By the way, ASIC stands for the Australian Security and Investment Commission, has quite broad powers. Anything around companies or investment fundraising, the likes, is regulated by ASIC. If you want to set up a financial institution here, and that sounds a bit ridiculous, nobody wants to set up a bank. Well, until you do, you need to speak to APRA, the Australian Prudential Regulatory Authority. APRA works closely with ASIC. They look at your permits for taking deposits and making loans commercially in Australia and make sure that you have sufficient funding. So you need to be aware of APRA. Believe it or not, I have clients who had issues with that, who came over from New Zealand actually, and they were ultra high net worth individual and started making loans through a family office. And I said, hang on, guys, I think you need to speak to APRA. And in fact, they had to. Again, it wasn't a problem. Telecommunications, and careful, our telecommunications regulation in Australia is really, really broad actually, because it was written with a lot of digital telecommunication in mind. You need to speak to the ACCC, the Australian Competitions and Consumer Council, I believe it is. You need to speak to them and get your permits right. Similarly, energy and infrastructure. Even if you want to only consult or you have specialist knowledge and are doing specialist work over there, careful, you need to get a permit potentially from energy and infrastructure if you're posted here to build a couple of high voltage lines, for example. And then we've got the healthcare space. The healthcare space is one where I see more and more people operating from elsewhere with telehealth and the likes. Careful, because a lot of the colleges that accredit you are at the Royal Australian College of General Practitioners and the Royal Australian College of Surgeons. They're actually the same body together with the Kiwis and licensing each other. So if you're a member of the Royal New Zealand College of General Practitioners, you can actually, under your professional code, practice in Australia, and you could run a telehealth from New Zealand in Australia. But if you want to do that, you still need to be accredited by APRA here in Australia as well. APRA is the government agency that regulates. Once you have your RACGP or RACS for the surgeons or the dentists or whatever it is, at the professional body, once you've got your professional accreditation, you still need to register with the federal agency, which is the Australian Health Practitioners Regulatory Authority. So make sure you do that if you want to provide services remotely from New Zealand. And last but not least, we've got money laundering. So if you're facilitating payments, and I've got a client in that space as well, if you're facilitating payments or doing anything with money or money-related services, you need to register with AUSTRAC just to make sure that you meet the compliance requirements. So some of our attendees might now think, Michael, there's not really anything in here that applies to me. What does that mean? That means congratulations. You don't have that much to worry about. You can get on with it and start developing your pipeline into Australia and start selling into Australia. I think that's the good news here. Straight away, a bit of ease of mind.
Yeah, Michael, I think some of the accountants, from our own community, they would like to sometimes expand their operation into Australia as well. So what is governed for anyone doing the accounting or bookkeeping services in Australia from New Zealand?
That's again a very, very good question. Australia is a bit of a funny one in that sense. For an accountant or bookkeeper, so accountant is a self-regulating profession. So in order to do accounting work, you are under the professional title of accountant. You need to be a member of either CPA Australia or CANS. So CANS is the Chartered Accountants of Australia and New Zealand. New Zealand only had the one accounting body, which merged with the Chartered Accountants of Australia. So most of our accountants would be CANS members anyway. You're good to go, basically. Yeah, you might need to update your details with CANS. You might need to update your private practice certificate or license if you have one. But the more important thing is your indemnity insurance. Obviously, your indemnity insurance that you have would cover mostly business in New Zealand. You need to make sure you have appropriate insurance cover that's under your professional code for Australia and are covered appropriately. And that is the accounting side of things. However, depending on what you want to do, if you want to be a registered valuer, you need to register with a federal body and get appropriate in Australia and need to get appropriate insurance as well. If you want to, as a bookkeeper, assist with superannuation advice, GST, lodging BASs, you need to be a registered BAS agent with the Tax Practitioner Board, which is a sub-arm of the ATO. And if you want to give full tax advice, you need to be a registered tax agent with the Tax Practitioner Board in Australia. Don't just take advice from anyone, because the indemnity policy doesn't actually cover you if it relates to Australia, unless you are a registered tax agent in Australia or BAS agent in Australia. So what you can just do is go to www.tpb, Tax Practitioner Board, tpb.gov.au, and on there you can search to register for the tax agent. If you look up Michael Messner, you will find me. I have my tax agent number there. I practice under Vantage Accounting Pty Limited, which in itself is a registered tax agent as well. So always make sure that the person you're dealing with or the business that they're dealing through is a registered tax agent, regardless of whether it's bookkeeping services or accounting services. Make sure they're a registered tax agent. Good question. Thank you. All right. So we've talked about what we can't do, and as a result, everything that we can do. Now we're going to talk a bit about, okay, if you're selling into Australia, it's really important what the thing we're selling is. And this gets quite tricky, that people say, oh, I actually sold this and this. Hang on. Each supply under the law is actually a supply in its own right, even if they're supplied together. And this will also become very important a bit later when we talk about GST in Australia, because businesses might just have to, if you sell goods or services into Australia, you might just have to register for Australian GST in Australia, even though it's an export for New Zealand GST purposes. So the first thing we need to do is just identify what is our supply. And I'm sorry I used the term supply, but that's what the law uses. And a supply is basically that thing, whether it's a service or whether it is a good, it doesn't really matter. So we need to identify our supply. and its constituent components. And I'll talk about the constituent components as well, because whether you realize or not, we have a lot of composite and mixed supplies in our daily lives when we don't even realize we're buying actually multiple things in one transaction. We also need to identify very, very clearly who is making the supply. Drop shipping is becoming a thing. You might have a 3PL. You might actually be providing something that you don't even have physically in New Zealand. Instead, you produce the order with someone in China and they ship it directly to the customer in Australia. The question is who's making what supply, because that determines who pays tariffs and who pays GST. And we need to be clear about who the supply is made to, and not just who is that person, but do they have an ABN? Are they registered for GST in Australia? Where are they located? That's very important as well. And last but not least, if you do things for free, great. With GST, we usually don't have a problem. You start realizing, start talking about GST, very important. But in the first place, well, what's the value of the supply, and are we actually getting something for it? Careful when we talk about tariffs and import duties. So I hate the word tariff, not just because of Donald Trump, but because the market value is usually the deciding factor. However, for GST legislation, there is actually the consideration, what we're actually giving for it, the deciding factor. So we need to identify all of these. Don't worry, I'll go through an applied example afterwards. All right, so what's the thing? We need to distinguish between the composite supplies and mixed supplies. And as I just said, when we're buying a thing, we're actually not usually buying one thing, we're buying a whole bunch of things. And that determines our tax and duty treatment, because sometimes the things we buy are really integral to the main thing we buy, and then we have a composite supply. While at other times, we actually buy multiple things and they're just bundled together because we like it that way, right? So a composite supply is comprising of two or more goods or services which are naturally is here the key word, bundled and supplied in with each other in the ordinary course of business. So we're having a normal arm's length transaction and we just happen to supply the two things together. And one item is usually the principal supplies. The item is therefore a combination and they couldn't really be supplied separately. Best example here I have is the cup of coffee. Try going to a cafe empty-handed with nothing other than your credit card and you order a coffee. I mean, you're not going to put your head under the jug, under the coffee spout, and just drink it from the coffee spout, right? You need a paper cup. So when you buy your coffee, your takeaway coffee at the cafe, you're actually not just being supplied with coffee, that liquid, that black liquid. You're instead also being supplied with a paper cup. The principal supply here, to be clear, is our coffee. The provision to the paper cup is merely incidental here. Think about the net of oranges. You need to buy a dozen oranges. How are you going to carry them if they're not in a net? Do you value the net? Well, you think you don't, but actually you do, because otherwise how would you carry them? The main supply here, the principal supply, I should say, is our oranges. The net is just incidental, right? And that becomes really important. And so I'm jumping a bit ahead, but if you think in terms of GST, in Australia, and GST here has a couple more carve-outs than compared to New Zealand. In Australia, fruit is a GST-free supply. But hang on, if I give you a net with it, the net is not fruit. We should be paying GST on the part component of the consideration, which is for the net. Well, that's why we have the theme of a composite supply. So you're getting net with it, but you're really not paying for the net, even though you are. The principal supply is the oranges, and that's why the whole thing is GST-free in this case. That's very different from a mixed supply. A mixed supply is a combination of two or more goods or services that are made together for a single price, but you could actually supply them separately. It's because, and they're not dependent on each other. You just happen to choose to bundle them together. An example is if you buy a dog, you see the dog is on a leash. You can buy the dog without the leash, no problem whatsoever. You can buy the leash without the dog, but when you first pick it up, here's your dog on the leash. You can be sure the dog owner or breeder charges you for the leash separately. Think about your compliance for your business as well. A tax return I've got there. You get usually by your accountant does financial statements for you and a tax return, or your bookkeeper does your BAS for you and your bookkeeping. but also management accounting. Technically, the bookkeeper could just do the books, and your BAS, sorry, I'm using a term here, that's Australian Business Activity Statement, i.e. your GST filing, could be done by someone else. You choose not to do it together, but technically it could be done by different people. So yeah, that's where we have different components and we just buy them together because it makes our life easier, but we technically don't have to, and that's why they're mixed supply. So we need to be a bit careful what the thing is that we're buying, because that can then also change our tax treatment, as I highlighted, our tariffs, as I highlighted, and also our legal framework, as I highlighted. All right, so we know what we're selling, and we agree to sell something to someone. What law actually applies? And we can broadly differentiate this in two different things. Number one, either we have a business to business transaction, or number two, we have a business to consumer transaction. You're obviously the business here. If we have a business to business transaction, then usually there's a proper contract in place. We actually engage some lawyers to draft up a contract, or even if we're only a service provider, we're usually to someone larger, then they put a contract in front of us. We don't just say, hey, what do you need? Oh, 100,000 computers. Yeah, I'll put them in. There's usually a purchase contract at the very least, right? And because we have a contract there, usually the contract would actually specify which law applies and which court has jurisdiction, whether it's the New Zealand court or the Australian court. Interestingly enough, there's one example that fascinates me. Argentina obviously went bankrupt as a country multiple times, pretend that they were in good financial shape again and try to regain the confidence of the market and try to issue bonds to borrow more money. Nobody was subscribing to those bonds until the government agreed that the law applicable to those bonds is that of the United States, and that a New York court would have jurisdictions over any disputes. And that's when the investors happily bought the Argentinian bonds. And the Argentinian government at the time was firmly thinking of, okay, we're going to take this serious. We need to repay these people. Then there was a change in government. The next government said, oh, doesn't matter. We will just not repay these bonds. And the investors actually sued in the United States court and won in the United States court. And that's when Argentina said, oh, we don't care. We're not bound by this. And the US court said, no, you're bound by this. And this issue is actually still lingering there until this day. Interesting enough, Javier Milei now said, no, these bondholders need to be paid out. That's his attempt to gain credibility for the country and restore its credit rating again. So theoretically, a Kiwi client, you as a Kiwi business could sell to an Australian client, and you could agree that the applicable law is that of Singapore, and the Singapore courts would be responsible. It's just a matter of mutual agreement, right? If the contract is silent and doesn't specify which law applies and which court has jurisdiction, then the applicable jurisdiction is usually determined by a conflict of laws, which is a legal concept, or private international law principles. So there's a type on the slide, I shouldn't say international law principles, but international law principles. Usually the court will then ask, where's the contract most closely connected? And this might be an interesting one. Hang on, I'm the customer, I'm in Australia, I'm supposed to receive this, I'm supposed to enjoy it here. And you say, yeah, but I'm the supplier, I'm manufacturing it in New Zealand, and I'm sending it from here. It's probably 50-50. If you say, oh, I'm the supplier and I'm drop shipping it from China directly to Australia, then it would be, hang on, no, then the Australian court will probably have jurisdiction. We also ask, where was the contract made or performed? If both parties were sitting at the pub in New Zealand at the time, well, then that might just push the needle towards the New Zealand law and courts. And then also, the courts traditionally look at where's the habitual residence or place of business of the parties. Even though you supply to me in Australia, but I actually usually reside in New Zealand, then the courts would probably say, hey, New Zealand law should apply. Also, the courts always want to fix a contract. The intention behind a court, or the mission of a court, is not to primarily award damages, but hey, how can we fix the contract so we're back on track, right? And then the courts decide, well, which law would make the contract valid or enforceable. That might be a shortcut. And the last bullet point is also that there's obviously international treaties and conventions, for example, the United Nations Conventions on Contracts for the international sale of goods, or there might be bilateral contracts as well. Obviously, you'd speak to a lawyer, but yeah, these are the factors that we look out for. If in doubt, start here and then speak to a lawyer. If we're having a B2C transaction where you're selling to a consumer, be careful if the consumer is located in Australia, which is the scenario we're obviously talking about here, selling into Australia. Be very, very, very careful, please. Australian consumer law applies. It doesn't matter where the good comes from. It doesn't matter where you are located. Australian consumer law applies, and Australian consumer law is really very, very pro-consumer. That means that, and Australian consumer law broadly speaks about consumer guarantees, unfair contract terms, and product safety regulations. If a contract is pretty unfair to one party, usually under common law you say, well, tough luck, the other party shouldn't have agreed to it. Australian consumer law doesn't apply that way. You could have someone who's not very smart buy something, a $5 item, agree to buy it for $1,000. And if they say, hey, that's actually unfair, they can go to the courts, to federal court, and say, under Australian consumer law, that's an unfair contract term. And the court might then revise the purchase price down, for example. The court is inclined to side with the consumer here because Australian consumer law is there to protect the consumers. Broadly speaking, for goods, Australian consumer law says that the goods need to be of acceptable quality, they need to be safe, durable, free from defects, acceptable in appearance, and do what they are meant to. So you can't just say, hey, I've invented a perfect cleaning agent, almost like home shopping network style, and then the consumer here receives it and it doesn't do the job. They could ask for a refund and you'd have to give it. Otherwise it'll go to court and you'll be ordered to. It needs to be fit for purpose. If you sell me a pair of scissors and it's not very good at cutting the paper, well, then it's not fit for purpose. You need to give me a refund. It must match the description or sample shown. So if you sell something on Shopify, for example, blue pens, and you send me a green one, that's not matching the description. Give me a refund or send me a green one, please. And you must be giving the good to me with free title, basically. You must be the legal owner and pass that ownership to me as the consumer. You can't sell me impaired goods. For example, if a chattel mortgage is registered over a car that you're selling to me, you can't sell that to me with that chattel mortgage still in place unless it's specifically agreed. And you need to make repairs and spare parts reasonably available. You can't sell me a custom item. It breaks down after 5 weeks of use and then say, oh, sorry, I can't help you repair it. That's just not okay, unless the lifespan of that good was only supposed to be 5 weeks. So careful, there's a lot of obligations here. If you sell, you need to be able to really sell the right thing, which I'm sure you want to do, but also if the thing breaks in a short after, and usually we're looking at the first 12 months, you have a guarantee implied anyway under ACL, you need to be able to fix the thing that broke. If you're providing services, then obviously the services need to be delivered with due care and skill. The service must again be fit for purpose. So if you say you'll make me look like George Clooney, you need to make me look like George Clooney. You can't just say, well, this is close enough, and you must deliver it within a reasonable amount of time if no time is agreed. So if you say, I'll make you look like George Clooney, and we don't set a time, I pay my money, then what's a reasonable amount of time? Probably never. I'll never look like him. I've got to, well, not me, my wife has to accept that. All right. If there's questions, please ask them. Otherwise, obviously happy to move on to the next slide. Let's talk about tariffs or import duty, which I really prefer. So before we go into import duty, I'm not going to go too much into this because there's good news here, right? Before we go too much into tariffs and import duties, broadly speaking, most imported goods, as a rule of thumb, have a 5% import duty on the free onboard value and 10% GST apply on the import on the cost insurance freight value of the plus the import duty. Now we're throwing a couple of words around here. Free on board basically means the supplier delivers it to the boat and puts it on the boat, and once it's on the boat, it's the responsibility of the purchaser. So let's say you sell me some custom machinery, for example, or a couple of sheep, for example, New Zealand, you might want to sell me sheep. You cart them to the boat, you load them on the boat. The moment they're on the boat under FOB, free on board, then are my responsibility, which means everything I paid you to get this sheep on board the boat, including the value of the sheep, obviously, is my FOB value, and I would need to pay 5% import duty to the federal government in Australia on those sheep, and 10% on the CIF value. So the CIF value is cost insurance freight, which means that I'm actually only getting it when the ship docks in Australia, which includes the fuel basically and shipping over here, while free on board doesn't include shipping plus the import duty. So GST is on the whole on CIF plus import duty paid. Now, having said that, Australia has a whole raft of free trade agreements which negate the general 5% duty. Specifically with New Zealand, I am actually, and I had a look, I spent 10 minutes and I just gave up because I didn't have the time. I actually couldn't find a single good that was subject to duty coming from New Zealand. So you guys are probably sweet. This is obviously all triggered by your customs declaration or for people who are from Europe, because trade originated in the French language originally, the carnet vert. In Europe, you still have the green customs form, which usually has French wording on it as well, where you need to declare the item, where it comes from, what category it is, and what its customs value is. I couldn't find anything that New Zealand, if you import from New Zealand, you actually have to pay tariffs on. Again, speak to your shipping agent or your customs agent for details on this. And goods valued at $1,000 or less, FOB, I should say, $1,000 Australian dollars, FOB, or less are duty-free anyway. So again, even if you drop ship from China, if it's under $1,000, it's duty-free. No duty applies on the import. The duty is paid by the importer, and this is an important one as well. Who imports the thing? If ownership passes to me only at my doorstep, then duty is the responsibility, and the GST is the responsibility of the importer, which is still you. So that's why there's the term import on record. Make sure you agree who actually imports the thing into Australia, because that's the person who's liable for duty and for GST on the import. Let's talk about GST, and I quickly touched up on GST. So our rate of GST in Australia is 10%. And it works kind of the same way as it does in New Zealand, but we've got to be careful. Australian GST is different from New Zealand GST. So just because you have a New Zealand-based business and you usually sell to New Zealand-based customers, you're registered for GST in New Zealand with IRD, doesn't mean that you can just offset Australian GST paid from New Zealand GST and vice versa. They're different countries. They're actually two different types of taxes, and we can't blend them up. Okay, our GST law is a bit more complex than that in New Zealand. On a high level, it works the same way. If you need more information on it, well, the first place to look at is the legislation, the new tax system, Goods and Services Tax Act 1999, or ATO rulings that you can find on the ATO website, or from a registered tax agent. And so I should have said BAS agent, i.e. the bookkeepers as well, which we spoke about earlier. If you look on the TPB website, you can look at those. Broadly speaking, when we talk about GST, it is 1/11, and sorry, that's not on this slide. 1/11, people always say 10%, it's not 10%. Your GST liability to the Australian Taxation Office, ATO, is 1/11 of the value of the supply, which is the same as charging your value plus 10% GST, but it's 1/11. The legislation provides that you make a taxable supply if you make a supply for consideration. I don't think any of you do anything for free, otherwise you wouldn't be in business. So you make a supply for consideration. The consideration could be cash, and I've got a question here, can you give an example of that? So if you tell me what that is, then I'll touch on this, and I'll get into it with the Q&A as well. But yeah, we make a supply for consideration. What's the value? That might not be cash value. That could be barter as well. What do we get in return? Do we get a loan forgiven or something along that line? If the supply is made in the course of or furtherance of an enterprise that you carry on, i.e. you don't just sell, you use carpet, you really carry on an enterprise, a business where you're used to selling to customers. The supply needs to be connected with the indirect tax zone. Indirect tax zone almost means Australia, but there's a couple of parts of Australia that are actually exempt from, or not in the indirect tax zone. If you sell to Cocos and Keeling Island, if you sell to Christmas Island or Norfolk Island, very close to New Zealand, they're outside the GST zone, and you don't need to charge GST there. And you're required to be registered or actually registered, which means that your turnover is over the GST threshold. We'll talk about that in a second. Then you actually have to collect GST on the sale, unless we have a GST-free or input tax supply, which I'll talk about on the next slide. So fundamentally, if you're in business, you're selling into Australia, and you sell more than $75,000 a year, then you need to register for GST and need to remit GST to the ATO. We have supplies that are free of GST, and there are certain food items, fresh fruit, we talked about this earlier, fresh milk, for example, certain health items, medications and the likes, education, childcare, exports and cross-border supplies, religious services, some precious metals, transport and related matters, but that's where it gets all pretty fringe. So primarily look at your food items, health items. If you're exporting fresh milk from New Zealand to Australia, that would be a GST-free supply. Similarly, medications. If you're selling medical items that are listed in the schedule to Australia, that would be GST-free as well. GST-free means, as I said, GST-free. You don't need to charge GST on them and remit that to the ATO, but you can actually still claim an input tax credit, i.e. get Australian GST that you pay to manufacture the product or to get it sold to your client. You can actually get that GST back from the ATO. That's just a question for you, whether it's worth your time and expense to actually spend the money to recover a couple of $100 of GST. Speak to your bookkeeper, speak to Sumith, obviously, also Brisca in general. They can give you a bit of advice on that. Contrasting GST-free supplies to input tax supplies, which we have on the next slide. Input tax supplies means also you don't have to charge GST. However, you can't claim your input tax credit, so you don't get the GST back that you had to pay to bring about that supply. We're talking here really about financial supplies, which is different, slightly different to New Zealand. Residential rent, residential premises, and again, some precious metals, school tuck shops. Not applicable to most of you, any of you actually. And if you do have questions on that, obviously feel free to reach out directly to me. And I'll answer those questions that are coming up on the chat channel later. I said earlier already, you only have to pay GST if you're required to be registered or you are registered. And you're required to be registered if your turnover in the last 12 months or projected in the next 12 months is over 75,000 Australian dollars in Australia, obviously for supplies in Australia, not for supplies anywhere else. So look through your numbers and make sure you register if you have to register. Okay. We also have an exemption for non-for-profit items or entities. They only have to register if their turnover is more than $150,000 a year into Australia. But again, we might not have many non-for-profits here on the call, so that's a fringe case. All right, we've got to be a bit careful. There has been change over the last few years since 2018. If we're actually selling things through an electronic distribution platform, and I'm going to throw out names here, I'm not endorsing them, Shopify, Amazon, eBay, and the likes. They're considered an electronic distribution platform, and EDP is defined as a platform that allows merchants to use the service to make sales to customers, and the delivery of the service is by electronic communication. Service is not supply. Think about eBay. If I buy something from you on eBay, the whole transaction is handled by or through eBay to communication. I might be buying a carpet from you and you ship that physically to me, but the platform deals all of it. It's not just a chat channel where I manually request you for quotes or anything like that. It is an electronic centric platform. And where you sell through an EDP, like I just listed out, Amazon, eBay, Shopify, etc., if it is a low value supply, i.e. the value is under $1,000, then you actually don't have to register for GST in Australia and collect GST and remit it. The EDP does it for you automatically. So what Shopify does is the moment I input my address and it knows I'm in Australia, they're adding the 10, if the value is under 1,000 Australian dollars, they add the 10% GST on their end already, charge that extra to me, you never see that, and then remit that to the ATO directly so you don't have to register. So that's the good news. If you're going through an EDP, you don't have to deal with it. If you're not going through an EDP, well then you need to still register for GST, even for the low value imports. That's the big item here. And there's a bit of guidance on this in a Law Companion Ruling 2018/2. There's quite a few good examples and a bit more guidance from the ATO on this. All right. I'm aware of the time. I was going to go through a couple of examples, but we had some questions in the chat channel. And yeah, I'd love to answer those, obviously. So I had an anonymous attendee who asked, am I better to be registered for GST in Australia? And what would that mean for my business if based in New Zealand? What that means is that with your bookkeeping, most of you are zero based usually. You have a GST box in there. That's usually a home registration. So you now need to manually break up invoices into Australian GST where applicable and do the journal entries manually. Lodging your BAS is not that difficult. You need to first register for an ABN in Australia and then get an ARCN registration as well. The ARCN is with ASIC, takes a couple of weeks. You need to send a couple of documents over. The ABN registration is then very easy electronically online with the ATO. Your bookkeepers, Brisca, can definitely help you with it. We can help as well. And then you just need to lodge your BASs electronically. It's not that hard. The hardest thing is probably to account for your GST manually, unless you have a SAP or Oracle system like a large-scale ERP with advanced accounting functionality. You usually only have one GST type in there. It's just a matter of manual accounting. Your bookkeepers can easily cover that. Brisca, I know, do that all the time. That's not the issue. I think the question is really, is it worth it for you to actually register for GST in Australia? If you're not required to, you probably don't have that many sales in Australia. You don't pay that much GST in Australia probably either. It wouldn't be worth it for you to register unless you have to, because there's cost to everything, obviously, whether it's time or whether it's accounting or bookkeeping. So it's really a question of fact. I think the ultimate takeaway here is reach out to Brisca or us, and actually let's discuss the actual use case here. What are you doing? How much are we looking at, etc.? And then you go from there. I've got the other question here. Is it difficult to register? No, it's not really difficult if you know what you're doing. It's just a bit of time consuming again. Brisca and Vantage Accounting can easily help. That's not the issue. It's just more pointing you the right direction. You're having a bit of run around, getting notarized true copies of company constitution, sending them over to ASIC in Australia, getting your ARCN, and then going to the ATO. All doable, not an issue. You just got to do it.
Yeah.
Another
Michael,
question.
another good question. As a New Zealand-based business that pays GST in both New Zealand and Australia, am I eligible to claim a refund for the Australian GST if I have paid on business expenses?
Really good question. And there's a bit more to that, actually, where I'd need more information. The first question I would ask is, if your business is based in New Zealand, why are you paying Australian GST in the first place? Because exports from Australia to New Zealand should be GST free in Australia. So I would actually talk to your B2B business partner here and say, mate, why are you charging me GST? You probably shouldn't in Australia. But if your business partner, or your not business partner, but your supplier actually sells more than 50,000 New Zealand dollars per year into New Zealand, they actually have to register with IRD in New Zealand for GST, and are probably not aware of it. So you actually don't have the problem. Your supplier has the problem, and you shouldn't pay GST. Sorry, I take this back. If you're frequently traveling into Australia and have hotel accommodation here, for example, and meals that you pay for because you're here selling to Australian clients, can you claim that GST? Yes, you can, because it's directly related to supply you make to Australian clients, and those supplies are subject to GST most likely anyway. Well, they will definitely be if you are registered for GST, and yes, then you would do it. But yeah, there's a couple of nuances here. So I'd like to know more information. Probably reach out for an offline chat, book a meeting with Sumith, myself, either one, and then we can take that from there.
And Michael, there's another question. Do I need to have a physical address to register for Australian GST?
Good question. You need to have an agent. If you're a company, you need to have a local agent, which is usually a bookkeeper or your bookkeeping firm or accounting firm, and they will act as your local agent, which gives you that address as well. It's a regulatory requirement with ASIC to do that, to get your ARCN. If you're not a company, and so when I say company, it could also be a trust with a corporate trustee. If you're just a sole trader, no, you don't need to have a physical address in Australia. Then you just need to have a New Zealand address. That's the end of the story. So not that difficult, really.
We got one more question, Michael. Selling from New Zealand to Australia is not liable for any GST. Place of getting the service is overseas. So we will only pay GST to Australia, correct?
Yeah, correct. That's the case. Provided your turnover in Australia, your sales to Australia, is 75,000 Australian dollars or more per year, then you have to register, correct? Otherwise, you can choose to register and pay the GST, but then you can claim your GST in Australia relating to that as well. And let's be clear about this, just like in New Zealand, if you register for GST here, you've got more complication. But if you have a B2B client, I wouldn't care because I can claim in my business the GST that you charge me. So from that point of view, happy days, go ahead and register. It doesn't really disadvantage you. I know also we had one more question here. What documents do I need to provide? And is there a specific process for cross-border GST recovery between the two countries? Sorry to be a bit pedantic here about the language. While there's no cross-border GST recovery, it's a fundamental question. Are you registered for GST in Australia and charge GST on your Australian supplies? Yes, then you are allowed to also get a credit for the GST you paid in Australia on the supplies that you received relating to the supply you make in Australia. The amount that relates to the supply you make in New Zealand, well, that you can't claim GST or claim the GST back on in Australia. But then in the first place, if it's an export to you, New Zealand, then you wouldn't have to pay GST in the first place anyway. So there's just a bit more to work through here. But yeah, reach out and we can definitely help you with that.
I think there's another good question here. Are there any real benefits if I have a company registered in NZ and Australia? And what would a couple of those benefits?
Yeah, look, at the end of the day, and sorry, this is me being a bit opinionated. Really, really good question. Ultimately, you're in business. You want to enable the business to succeed. And if your path to success involves Australia in some way, shape, or form, then it's just a bit question of the business case. So, do you need to register, or do you need to have a company do you need to register your company? Sorry, having a company in Australia is different from registering a company in Australia because that might be a New Zealand company registered here as doing business and probably having a branch, etc., etc. On a high level, it's a use case. If it costs you $10,000 and you expect to make 15 grand of it per year, why have the hassle? Don't bother. If it's going to make you $1 million of net profit and it probably costs you $30,000 a year, bloody oath you're going to do it. And if you're not going to do it, you let me know because then I'll do it, right? It's just cost benefit on a high level. So really, I don't want to give you a boilerplate answer because it depends. That's the answer. However, and I think this is a beautiful segue to our next webinar, we're going to have another webinar. I'm doing more and more in New Zealand. I'm actually having people here now, or I need to have people here. What are our different options? What do I need to look out for? And then all of a sudden we have income tax permutations as well. This will be interesting because I have a lot of clients business owners moving from New Zealand to Australia. Well, what does all of that incorporate? Usually, in every part of the world, the Corporations Act for that country requires you to have a resident director in the country where you're incorporated. New Zealand also needs this, but resident of either New Zealand or Australia. So I've got a lot of clients who have an NZ company that come over here to Australia and they can actually continue using their NZ company, even though they don't have a resident director in New Zealand, because you can also have a resident director in Australia. So rather than redoing all your business and registering an Australian company, you can actually register your New Zealand company in Australia with ASIC and then get an ABN and a TFN in Australia and then continue practicing out of your New Zealand company, which actually solves a lot of tax issues and the likes and makes life easier, saves you money as well. However, then we need to look at income tax situation, double taxation agreement, etc. And that's exactly what we're going to talk about in the next webinar. So look, short answer, it's a question of fact whether it's warranted, cost benefit, what's your business case. Longer answer, we'll cover all of this in a 1-hour webinar in 2 weeks' time. So please sign up for it because this is the really sexy and juicy stuff. So you'll want to hear about that in 2 weeks' time.
Perfect. Michael, you're pretty much up for the time today. And thank you very much for sharing your knowledge and wisdom here. And I'm sure most of the attendees got some, expanded their knowledge in how to navigate through their challenges in selling to Australia.
Sorry to interrupt, Sumith. We've got a brilliant question. How can we get registered for that webinar, the next one? Sumith, tell everyone how to sign up, please.
So yeah, we will again, have you registered for this one? So we will share that on LinkedIn and also the Eventbrite, so you can join register yourself for the next webinar. So just wait for us to post the next webinar up on LinkedIn and Eventbrite. Thank you very much for everyone joining today. We wish to do a few more webinars to expand your knowledge. And it's very important that you understand and get yourself set up correctly at the beginning, or even if you are midway through. So it's good for you to get the right advice and then get yourself structured the way that, then you are hassle-free for running a business easier if the compliance is pretty much under control. Thank you very much for joining again, and we look forward to see you again in the next webinar.
Thank you very much. Bye.